Hello, everybody. Okay, so welcome to Thanksgiving Monday. Okay, most of you are probably hanging out with your family, but I am here committed to coming on for 30 minutes to chat about money. So today we've got a really exciting one, and which is why I'm not waiting till next week to do this one. I'm doing it right now. Okay, so let me get this going here. So a couple of things here. So we are October the 14th. So a big shout out to everybody out there, happy Thanksgiving. And I want to do a special shout out to my family and my son, my aunt and uncle, Bob and Shayna. Thank you so much for all the love and the generosity that you guys have given us. Thank you to my boy. Love you so much. Okay, so let's get into this, and hopefully we are live streaming somewhere. Okay. All right. So let me see here. So we are going to be going through a calculation on exempt market dealers. And if you don't know what that is, hold on to your seat because we will cover exactly what an exempt market dealer is. Okay. So yeah, we will go through what an exempt market dealer is and why in particular I'm actually saying, you know what, maybe you don't need an exempt market dealer. So this is not to, to sort of badmouth that industry. I have friends who are exempt market dealers, and they do a wonderful job. But in some situations, it actually is better not to have an exempt market dealer because there's an alternative. Okay, so I think the streaming did slow down a little bit. So let me just redo my thank you because it is Thanksgiving weekend, Thanksgiving Monday, and you're here watching me on Money Matters Monday. And so a big shout out to you for watching and supporting. Thank you. And if you're watching this on YouTube, please give me a thumbs up or subscribe. So a big shout out to my son and to my family, Bob and Shayna and Wendy, my mom and dad. Thank you so much for your generosity of time and love and just always supporting me. Okay. So on that note of support, let me also share with everybody here, because this is a big win for me and a group of fellow investors. Okay, so on the screen, you will see Rising Above the Rest. This is the cover of the ebook that we just released. And within a couple of days, it was sold like mad cakes or cupcakes or whatever sells like crazy. Okay, we got #1 bestseller ranking in a couple of days. And so I just want to give a big shout out to my co-authors in this collaboration book and to everybody who supported us by buying a copy of the book. So thank you so very much. Now, if you were not able to get a copy on Amazon, you are in luck. We actually, what I have here, let me just, okay, woohoo. So I hope you guys could hear that. Okay, so we are in luck. If you have not been able to get a copy on Amazon, I am going to put in the comment box on the chat. Okay, you guys can get a free copy by going on to this link that I just put in the chat. Get a copy of this #1 best-selling book in real estate by 13 authors, including myself, where we talk about a different strategy in real estate and how we navigate it through COVID times and how we're sort of continuing on post-COVID. Okay, so a great read. So that is the big shout out on the book. Okay, and I have one more shout out here. Actually, I lied. I have 2 more shout outs. Okay, this coming Friday is our mastermind. So if you would like to be invited to the mastermind, please email me. During this mastermind, we talk about an educational moment, and we network, and we get to build that support for each other within real estate. So please email me if you would like to get an invite to the mastermind. Okay, so my email is also in the chat. So you can email me, get invited to the mastermind, and that would be super fantastic. So, okay, and one last shout out. Okay, we are doing our group analysis sessions. So if you are interested in attending as a participant, please email me. There is a small investment to be a part of this group analysis, but think of it this way. The investment that you make in the group analysis will get you over your hump of, how do I analyze? I don't have enough data to analyze this. I don't have enough data to make a move on this opportunity. This group analysis, these group analysis sessions will get you over that hump. It will give you some spreadsheets that I use, especially ones you see me using every week on these sessions. You will get those during the sessions if we use them. Okay, we will look at a deal that you're looking at or another deal that one of the other participants are looking at. Okay, so those are my shout outs, and thank you for lasting through my soft sales. Okay, so let me unshare this book cover. Yeah, number 1. Okay, let me see where that horn is. Oop. Okay, lost my mouse there for a second. Okay, woohoo. All right, so that is the shout outs. Let me now get into the topic of analysis today, which is exempt market dealers. That's what EMD stands for, an exempt market dealer. They are great to bring on board in your team. Okay, and the reason why I'm talking about this specific topic today is that if you are working on a project and you need to raise funds, this is something that you should be listening to. Okay, because there's pros and cons about using exempt market dealers, and there is an alternative to using exempt market dealers. Okay, so let me share with you an Excel sheet. Okay, so here we go. Okay, so on your screen, you should see an Excel sheet. Okay, and let me just make this a little bit bigger. Okay, so an exempt market dealer is an individual or a company that you would hire. Usually it's a company. You would give them a retainer, and in this case here, you're seeing a $5,000 retainer on this. And what they're going to do is they're going to help you raise funds for your project so that you can either acquire the land, do the development, or just do the acquisition and then move on. Okay. They are the ones bringing in the capital for you to close on your opportunity. Okay. Your other alternative is to bring people on your team to help you raise money. Now you can raise the money on your own. So that's one option. The second option is the EMD, okay, the exempt market dealer, or the third option, and there's lots of other options, okay, but the third option is to bring people like me onto your team that has the experience, that has the network to help you raise the funds. Okay, so I've done this on a couple of projects now. Okay, so I can share with you the pros and cons of going with an EMD and versus bringing on a team member and giving up a little bit of equity so that they help you raise the funds so that you can execute on your project, regardless of what type of project it is. And this actually isn't just for real estate. It can be for an acquisition of a business or growing a business as well. And yeah, so I was getting a bit sidetracked there. Okay, so if you use the EMD, so that's this option here. Okay, so let me just highlight that so you can see it. So with the EMD, let me see if I'm making it, yeah, so I can make it a little bit bigger. Okay, so with an EMD, you're going to bring in a company, you're going to pay them a retainer of, let's say, $5,000. I've heard some retainers going up to $50,000. Okay, this retainer you don't get back. It is money that you put in there because they're going to invest time into helping you build out your pro forma, validating your numbers, and putting together a package to help you raise funds. Okay, so that money is not lost money. Okay, then the fees that they charge you is anywhere from 3 to 7 plus. Now I'm running my numbers here going up to 7. But there are companies out there that will charge you 8, 9, 10% to help you raise the funds. So this is where you need to run your numbers to say, hey, you know what, does my project have enough meat, okay, in it to pay a company 5 to 7 to 10% here? Okay. This will depend on the amount of money that they will help you raise. So it is prorated for the amount that you need to raise. So I've put down here 2 to 3 to 4 million. So you can adjust this number to whatever amount you need for your project. Some EMDs will not even look at your project if it's under 2 million. It's too small of a return for them. Okay. So which is why I started at 2. Some EMDs I've spoken to said, hey, you know what, Hung, we're not interested unless it's 5 million and up. Okay. So you're going to want to find the EMD that works, you know, in that range of funds that you need, and that the fees that they charge you is going to be, you know, proportionate to what you're able to pay out with your project. So the calculation here is basically whatever the amount that they raise for you times the fee that they charge. Okay, so 2 million times 3%, that is 60,000. If they're going to raise 4 million for you and they're going to charge you a 7%, it's just 4 million times 7. That gives you 2,800. No, yeah, 2,080. Sorry, 280,000. Okay, so the negatives about using an EMD. Okay, so I'm going to skip over the pros. The negatives is that you don't get that retainer back. That retainer is money that you paid for them and they do that initial work for them. So whatever that retainer is, it's gone. Okay. The money that you have to pay them, whether it's 60,000 or 280,000, that amount is due on closing of your project or due on closing of your opportunity. It is not years down the road in 2 years or 5 years when you make enough profit to pay them. Okay, so that money that you have to pay them is due immediately upon closing or upon when the funding is done. Okay, and that money is then, so then keep in mind that you may need to include that money as part of your raise. Okay, so if you're raising 4 million, 280,000 of that 4 million is going to pay your EMD. So really you're raising about, like, you actually only need 3.7, whereas and then the other 280, 300,000 is going to pay for your EMD. So keep that in mind as part of your calculation. The other negative thing is that the investor base that the EMDs go to raise that money from, those investors are not, their information is not given to you. So it's not like you can take that information and then in your next project, go back to those investor base. You would then have to go back to your EMD again and get them to raise more funds for you, which totally makes sense, right? It's their network that they're tapping into. Okay, so the other idea is you bring on a team member, and this team member will help you raise funds in exchange for equity. Now, I've done this quite a bit, and I love this strategy because I'm using my time, my sweat equity in for exchange for equity. Like I'm using my time. And I have a lot of accredited investors in my database, a lot of family and friends that I can go to say, hey, I'm working on this great deal. This opportunity is going to give X amount of return. Do you want to come in? Okay, so this is the breakdown of the numbers here. So I've got a 15% ROI on the project. Usually I'm running this way higher. Okay, so usually the projects I'm going into were at 18, 20, 23 for new development. Okay, so whatever that percentage ROI is that you're calculating, that's what the number's going in here as. And then what we're doing is I'm saying, okay, every single year, once the project is up and running, we're going to make X amount of money. This money is for the whole project for everybody, okay, per year. So that's going to include the cash flow, the appreciation, the mortgage pay down, any interest, all of that stuff, whatever that is per year added in, minus all your expenses. Okay, so all the expenses go out. So here I just threw out a number of $500,000 in here. Okay, and then the green cells is what we're going to play around with just to see the effects of this. Okay, So you're going to bring in a team member, give them a percentage of the GP. So depending on how much that person's going to raise, okay, i.e. myself, you're going to give them a percentage of the equity. So this equity percentage could be anywhere from 1% all the way to 25%. Okay. The higher the percentage, the better for the person who's going to raise the money for you. So ideally, if you're, the partner running this, you're going to want a lower percentage going to them. Okay. So let's just say that the raise is 2 million and you've offered to give them 5% of the equity. Okay. So the 5% is out of the whole 100. Okay. So that means that at the end of the day, they actually only make 0.8%. Okay. Because what you're doing is you're giving them 5% of the 15% return that everybody sees. Okay. So even though the 5% seems like a decent number, it's actually not that much higher. Like it's an okay number, but what your fundraiser, what your team member is actually seeing is 0.8%. Okay. So in this particular example of $500,000, they actually see 25,000 a year. Okay. So let's just say I'm going to help you raise $2 million on your project. If we see a 15% return, which translates to $500,000, I'm going to see 25,000 per year once enough profit is made, usually to pay back all of the money partners coming in. Okay. That type of structure is dependent on how the project structure is set up. Okay. So let's just go on the assumption that I don't see any money until all of the money investors are paid back. So what that means is I actually don't see that 25,000 until way later. Okay. Which is totally fine. Like I'm in my projects long-term. Okay. It's not where we build something out for a year or two and then that's it. Okay. Now, if the project ends in 2 years and we cash out, we sell the property and we move on, well, then yes, I would see whatever that gain is. So instead of a per year, if this is the profit, then I would just make 25,000 and that's the end of it. Okay. So if this 15, so I'm going to put this to 20. Okay. So as you can see, my percentage goes up. Okay. But that 500,000 is still 500,000. So I still actually only get 25,000. Okay. So if you're connecting the dots there, this ROI number is an important number, but what's really important is how much is the actual physical cash. Okay. Because that ROI still translates to 25,000. Okay. So if the return on investment is 20%, but that translates to 100,000 for the year, or if at the end of the project, that's all we see is 100,000 and we sell. Okay. So me as a money partner coming in to help raise funds, as the GP to come in to help raise funds, if it's 5%, I would see $5,000. If I get 10%, I would get $10,000. Okay. So that's how the numbers are working there. Okay. So the benefit of going in and finding team members to help you raise the funds and be part of your GP, okay, is regardless of how much money they raise for you, they still get the same percentage and their return is the same. So it's not prorated based on the amount that they raise for you. Now, this can be structured however they want to structure it for you, or you decide to structure it, but usually this is the case. Okay. You don't pay, so you as the main GP on this, the main operator, the main project manager on this, you don't pay this money to your team members until the project is making money. Meaning you don't have to pay this money upon closing. You don't have to pay this upon acquisition. Okay. You're paying this once the profit is recognized. Okay. So you've actually de-risked a lot of stuff for yourself here. Whereas with the EMD, you're taking a risk because you're paying for this fee. You've actually already raised the funds to pay for their fee. So now then you have to go and make sure your project is profitable to cover that amount of money. Whereas with a team member, because you're not paying them this amount, okay? So let's just say this is 15%, okay? And we're just gonna input this formula here and we're gonna say plus 5%. Did I do that right? Enter. It's not letting me enter. Okay, so I'm just gonna put 20% there. I'm not quite sure why it didn't let me enter. Okay, so if it's 100,000 profit per year for everybody, okay, your team member is going to get 25%. So this would mean that they are a main player on your project. That means they would actually only make 25,000. Okay, well, you don't have to pay them that 25,000 until the project is profitable. Okay, and then and then this is the other big benefit of working with a team member. You get to meet all of the investors that come into your project. So that means every single accredited investor that's part of your team members database that participates in your project now becomes a contact of yours that you can work with on future projects. Okay, so if that doesn't excite you, okay, okay, the other reasons that I've shared with you should be really good. Okay, so let's see. So in this case, okay, so after running this, I hope that you will agree with me that bringing in team members to help you raise and giving up a little bit of equity, okay, is way more beneficial than hiring an EMD. Okay, now some of the arguments that I'll get is, Hong, if I bring team members in, they're in the project for life. Like as long as we hold the project, they're part of this project. Whereas the EMD is they're in and then they're out. Okay, so the way I look at this is that if you bring on a very good team member and they help you raise the funds, you're going to want them on your next project. Okay, so don't think of this as a transactional deal. Think of it as an opportunity to find a good money capital source that will help you with all of your future deals. Okay, now what else can I say about this? Okay, so I've got a note here about private lender option. This is another way to raise funds for your project, is just to get private lender money if you have that source. And yes, you can go through a broker. You don't have to do an EMD on that. So then your fees would be a lot less. So you're probably looking at, 10 to 15% on that money. And then your lender fees would be anywhere from 1 to 3%. So you have to sort of do the calculation on that to see if it's worthwhile doing a private lender option. Because the benefit of going with the private lender option is that then it's only, 6 months to 2 years to maybe 3 at the most. And then they exit the project. And then the equity is just with you and the capital that you were able to raise. So there's some benefits to that. Okay, so that is today's session. So thank you so very much, everybody, for participating. If you have not gotten the book collaboration, please do so on the link that I've included in the chat. You can get a #1 bestseller book, okay, for nothing, because it's part of my gift to you guys on Thanksgiving Day, okay? Mastermind, if you're interested on joining that is coming up this Friday. It's the 3rd Friday of every month. And if you need help with your analysis on your opportunities, please reach out to me, okay? The investment is very, very low to participate in the group sessions to analyze and basically break through your analysis paralysis. All right, everybody. Thank you so much for watching and have a fabulous Thanksgiving Day. Bye.